February is when the Reno-Sparks housing market usually starts to wake up, but this year just feels different. Inventory shifting, buyers are more selective, and sellers are adjusting fast. In this update, we'll break down the February stats, review the charts, and highlight the trends shaping the spring market. You don't want to miss this. Let's go.
Assist to sell way smarter.
Hello, everybody, and welcome back. It's great to be with you once again on the Reno-Sparks Real Estate Market Update Show, this time for February 2026. Now, these are for homes in the Reno-Sparks metro area only, and it's for single-family residential properties, so basically houses, townhomes, and condos. If you do me a favor, click that like and subscribe button down below. It really does help us get this video out to as many people as possible. So let's go ahead and dive in. Before we do, let's take a quick look at these charts. As you can see on the top here, this yellow box will be the main data point we're going to discuss. On the right, it says January of 2025. So as I record this, it's early February. So we have numbers through the first month of the year, January 2026. We like to compare year over year to give you an apples to apples comparison. And of course, in the middle, you'll see the difference between the two. Now, along the bottom, most of these charts go back a decade, 10 years. So in this case, back to 2016. And on the left will be the different data points we're going to discuss. Now, the first chart we always start with is mortgage rates. Why? They have the biggest influence on the overall real estate market. The majority of people out there buying homes do so with the use of a mortgage. Therefore, the more expensive mortgages are, the less people can generally afford, and it does impact the market. So right now we're sitting at 6.1%, which is down 12.4% from last year. We're sitting right at an even 7%. So that's good news. And as you can see here, and I've mentioned this a number of times before, we're starting out the year kind of in this channel, but we are trending in the right direction for a little bit lower interest rates, which is a good thing. Now let's talk about median price. This is what gets the most coverage in the newspaper and on TV and so on, and that is the median price of $525,000, dead even, flat from last year at $525,000. And you can see the chart here. The reason interest rates influence the market so much is because of mortgage payments. And right now, the average mortgage payment is $3,681, which is down 7.7%, where we're sitting at $3,986 just a year ago. So we're heading and trending in the right direction for affordability. What you're looking at on your screen here is affordability index. And what this means, if you look at the number 67, that's essentially a percentage. It's the percentage a median income earner in our area can afford of the median income price. Right now, a median income earner could afford 67%, but that affordability is up 21.8%. We're only at 55 last year. So once again, as you can see on the chart here, we are trending in the right direction if you're out buying a home. Let's start with new listings. Now, these are people that are homeowners and said, yep, I want to put my home on the market first of the year in January of 2026. 491 home sellers, which is down 6.1% from this time last year. We only had 523. Now, let's look at new listings by price. Now, this chart's a little different. It's not time frame, it's price. And you can see the different price ranges down here: 100 to 200, 2 to 3, 3 to 400, 4 to 500,000, and so on. And then on the left side would be the actual number of new listings. And you can see this is a very normal chart for new listings. The higher the price, usually the less listings, the less homes are built. Obviously, they're less affordable. So this is about right. The majority of listings come on the market between 4 and 5, 5 to 6. And once you hit that 600 to 750 and above, it starts to fall off. Now let's look at active. Now the difference between active and new: active are homes that are just on the market that may have been put on the market back in December or November, October. This is a total number of homes you'd be able to go look at if you're thinking of buying a home. And if you're selling a home, this is your direct competition: 905, which is down 15% from this time last year. We had 1,065. So active inventory down just a bit. Now let's look at active by price. And this is where things get real interesting. I want you to pay attention. As you can see, we have quite a few actives in the normal 4 to 500, 5 to 6, and even 6 to 750. And we also have a significant number of homes, 750 to $1.5 million plus. We're going to come back to that in just a minute, so hold that thought. Now let's look at closed. These are sold homes. These are homes that sold in the month of January 2026. 333, which is actually down 7.5% from this time last year. We had 360. But this is where the stats and the charts get interesting. Let's look at closed by price. Again, a very normal looking chart. The higher you go in price range, the less sales you're going to have, because, well, the higher you go, the less people can afford the higher priced homes. So you're seeing a normal chart here. 4 to 500,000 is where the majority of sales take place. 5 to 6, it starts to drop a bit, and you can see the numbers fall off as you get higher in price ranges. But where it gets interesting, if I go back to the active by price, here's where you can see a whole bunch of listings active, meaning for sale homes in that price range. And then when you go to sales, very few sales. Now, this isn't panic mode because January is generally a fairly slow month because the closings or the homes that sold in January are a result of activity or sales or contracts that took place back in December or even November or earlier. So something we want to keep an eye on is that difference between active and actual closed sales. The larger the difference, that generally puts downward pressure on prices. Let's look at supply of inventory. And basically, this just means the number of months of homes that are on the market. So these are a couple of charts I like to look at, what I call canary in the coal mine, or just early indicators of where the overall market is headed. Right now, we're sitting at 2.7 months, which is down 8.1% from this time last year, where we had 3 months of inventory in the market. The next canary in the coal mine or indicator chart is unsold listings. Now, these are the number of homes that were on the market and for one reason or another did not sell and were taken off the market in January. 106, which is down 14.5% from this time last year, where we had 124. Not alarming numbers by any stretch, but certainly something to keep an eye on. So what does all of this mean? Well, if you're selling your home, there are some good signs and some things to watch out for. Number one, there is less competition on the market, as we saw over here with new listings on the market are down, active inventory is down, so you have less competition. On the flip side of that, though, is we are not seeing home prices move much at all. Home prices have remained relatively flat. Home prices haven't moved significantly. As a matter of fact, if you're in those upper price range homes where we have very few sales taking place, you may actually see your prices pulling back a little bit. So it's competitive in that regard. On one hand, things are getting more affordable. We're seeing lower interest rates. We're seeing less competition. But on the other hand, prices really aren't going anywhere. So be very conscious of the price you put on your home. Make sure it's appropriate for your neighborhood and your amenities and so on, and you'll do just fine. As far as buyers go, lots of good news. Now, there's less to choose from, which isn't always the best, but there is some light at the end of the tunnel, so to speak, as far as affordability goes. You're getting lower interest rates. We're getting where prices aren't really going up anymore. We're getting lower interest rates, which is leading to more affordable payments. Regardless of your real estate challenge, if you're thinking about buying or selling, you owe it to yourself to check out Assist to Sell. We sell homes for only $49.95. It's 1% for homes over $500,000, so a great deal all the way around. If you have any questions, you need anything, don't hesitate to reach out. If you scroll down right here and you want to know what your home is worth right now, thinking about putting on the market, or maybe you're a buyer looking at a house you got your eye on, you want to get a value for it, you can click right here where it says Find Out Now. We'll give you a quick automated home valuation, get you started. I wish you nothing but the best in the month of February. Happy Valentine's Day. Hope you enjoy the Super Bowl, and we'll talk to you next time right here on the Reno-Sparks Real Estate Market Update Show. Bye-bye.
Assist to Sell. Way smarter.